Good morning and welcome to Trading with Larry. It's Larry Benedict again, joined by Eric Shamalov. Good morning to all. Exciting day ahead of us. Quiet yesterday for sure. A little choppy and whippy. Good trading for what I like to do. A little mean reversion in and out. Market caught some selling on the close last night. The MOC was actually 2 billion for sale, and the S&P, the SPY, did about 50 million shares, average volume about 150 million shares or 130. So we were doing like a third of the volume. Very light day all around. Again, it looks extremely light. I don't know what's going to move us. I mean, there was a lot of crazy news overnight. Trump wanted to tariff China like 1,000%. He got all pissed. Then he fired the woman from the Fed, who's really not fired. She's fired by him, but she's not out of a job. She's still there. And I guess they have to go through a legal process to get her out. But I think that's not going to work. So she's there for the time being, even though she was fired. She says she's not leaving. Again, a bunch of news on tariffs, him talking about India, him talking about some kind of digital something, and he's going to tariff all chips that are, involved with this digital situation. But he's not going to do anything because he's taco. You know that. He's taco on Putin. He's taco on pretty much everything. So the market is down slightly. It actually, NASDAQ traded down about 150 off this stuff last night. Now back down 25. It's pretty much Nvidia. Nvidia earnings tomorrow night after the close. I want to spend a little of this podcast talking about it, although we'll talk more about it tomorrow. And it's bid up. And it's interesting. The bonds are acting really weird. The short end of the curve is all up, and the back end of the curve is all down. 30 years down, 10 years kind of flat, 20-year down a little bit. And, we're sitting, and right now, I want to get a little bit into the mean reversion trade that, took place in oil. Although, the trade is not done. I think we're going to see under $60 oil. I still believe it. I know this was a big head fake and it traded up to 65 yesterday. So, I can dance around saying, how good this trade is, but it definitely did trade up yesterday. But it looks heavy, and now we're going to get some stats out of the EIA, etc. And I believe they're going to reverse everything from last week, where they showed big draws moving forward. And I do think, a lot of the mantra that I believe is, we're dealing with a slowdown across the board, but we're dealing with, the fact that inflation is, ticking into the market, and durable goods look like they were actually up again. The actual orders were down, but not as much. But number doesn't really mean a lot. So I'll throw it to you, get you started, hear what you're thinking, and then we'll roll right into it.
Yeah. With all that news last night, I think Friday's Jackson Hole reaction is now under question. Basically, half the move was reversed in futures. Here right now, it looks like it wants to bottom out. This is yet another reaction on a couple of headlines. Him wanting to fire Cook, which he is going to fight in court. Let's see how that works out. And then the digital tax tweets and more
Yeah.
trade war headlines.
India, China,
All of this stuff gets thrown out within the trading day. I'm expecting the same today. We have Nvidia earnings tomorrow. The question really is Friday's move going to get completely wiped out?
I gotta throw a flag on the play and call a timeout, because you're saying the move was taken away, and the move has not been taken away, not even close. The S&P is still
I didn't say
70.
it was taken away. I said it
I thought
was
you said it was almost taken
half of
away.
it. Half of it was taken away.
No, not even close. No way. We were down less than 20 handles yesterday. We went up 100 handles on Friday.
Yeah, but with the futures move last night, it retraced actually more than 50% of the reaction. So
Yeah, so what? But now we got back all of it and SPUs are almost green. So I don't think we gave back the move. I would say that bonds gave back the move. Bonds gave back the full move. Currency's now whipping the other way, getting back the move. The only thing that really hasn't given back the move is the S&P in my mind. Nasdaq gave it back a little more than S&P, but so far, and the Dow gave it back. The Dow is down almost 400 yesterday after being up 800 on Friday. So I'm seeing it there. I'm not seeing it. S&P is at 6450. We were below 6400 when that number came. When that speech came out. Um, we had 3 or 4 down days in a row. People were jumping out windows. It was kind of like 1929 a little bit. And I'm only kidding, right? But people were freaking out on a 1,000 point down move in Nasdaq after it went up 7,000 points. So you have weak hands in the market. That's what I think we have. And Nvidia is going into the earnings priced for utter perfection. Stock's $181, all-time highs. It's within touching distance of that. It's got a $4.6 trillion market cap. I know they want it to be the first 5 trillion. If you go back 4 years, there wasn't even $1 trillion company, or it's 5 years. I mean, Apple was the only company. It's amazing what's happened here, and it's all concentrated in 6 to 8 stocks. So I think we're running really dangerous here. I am looking. Listen, we're coming in to the end of summer. Looking at my calendar as we speak. We're going to wrap this week up into Labor Day, and then we come back from Labor Day on September 2nd, and it's game on. And I've seen this many, 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 many times in my 40-year career, how all of a sudden the deadness ends, like literally in one day. I don't know, the market is so global now, and the market is so different when work from home and people, whatever. But I don't know, it's interesting. Everyone's like, oh, they took the summer off. When was the last time you took the summer off? Who's taking the whole summer off? I mean, it just seems weird to me, and it's excuses after excuses of why the market is so dead. And yesterday's volume was it was actually unbelievable how dead it was. I mean, we did 800,000 e-minis. We usually do 1,000,001 to 1,000,002. Average is a little higher than that. When we have a sell-off, we usually do 2 to 3 million, and on a good volume day, which I thought we would have Friday, they didn't even have a good volume day on Friday. So I don't know what's going on. But market's dead, and I'm sure the straddle is under $20 today. I'm pretty sure. I haven't looked at it.
23.
23, so it's not so bad. I mean, it's a little higher than yesterday. Um, I don't know how we're going to move 23 unless something goes down,
64 6410 puts are trading at 350
Yeah,
SPX right now.
yeah, yeah. I don't know. I just don't see anything. I'm a little bit focused on oil here because if in fact they get a build, you know, it's not happening yet. They're ticking it back a little bit, ticking it back up. But if they get a build, I mean, we could go into the 62 handle pretty quickly, and then it's game on. But right now we're middle there. But I want to discuss for a second like the mean reversion trade. So it happened to be it's working today. But what happens is with the mean reversion trade, like if you have a trade that you really like and it's really going against you and it's dislocated, you could stay in that trade based on the P&L in your position. So if you're making money in Apple, Intel, et cetera, and you have a position in oil that's going against you, you really like it, and it's really gone outside the band and you believe will mean revert, your P&L is allowing you to stay in that position. And, I've done that for years. So we've been doing okay in our trading. So like yesterday, oil was up like 85 cents. Not a big deal. But we were able to stay in that because we had other positions that were working for us. So it just goes into the position. And then when it reverts 85 cents, we just collect that 85 cents, and I really like that trade. But that trade is based on P&L. That trade is based on how you're doing in your account. And I like that trade also. So, like, if that trade goes down, let's say it gets down even more, then I'll even get bigger in the position because now I got money on my side and I'm trading with positive P&L. And I think it's important for people that are watching this to understand how to do that. And that makes someone go from just an average trader to someone that can become extremely successful. And what that is it's basically the most important tool in your tool chest, as they say. It's called money management. Money management is more important, believe it or not, than trading. Money management is the key to everything. It's understanding how to take a loss. It's understanding how to move on to the next. It's understanding how to and we've seen this because we've traded together for at least 5 years, where you get too correlated in positions that are the same. And a lot of the reason why I don't do the kind of stuff that you like to do, which it works for you, and that's great. Everybody has their own trading methodology and whatever. I don't like to have two or three positions that could become that are uncorrelated that can be correlated. And I would say in my career, the biggest mistakes that I have made are having hedge positions that became de-hedged, and when they go bad it gets really bad. So you can lose, like it used to be, if bonds went up, stocks went down. That was how it was in the 80s and 90s. And then it was like, if bonds go up, stocks go up. So you would run correlated trades like that. So you would be short one, long the other, and all of a sudden it would decorrelate and you would be losing on 3 or 4 positions. And we don't like to have that happen. So you know, we want to use our P&L to get bigger. And listen, as a trader, like I always talk about this, like people have asked me, and I've made 8 figures in a day. I've made nine figures, but I've made 8 figures in a day for my hedge fund. It's not for me personally, but it was for my investors. I've had 8 figure days, and I would say to get to that point, it took a lot. And the most important day in my trading life was the first day that I made over $1,000. And when I did that, it took a long time to do that, believe it or not. Now, I don't know what $1,000 back in 1985 equates to today. I don't know if that's 10,000 or 7,000, whatever that number is. When I made that thousand, it was the best day ever because I realized that I could make $1,000. And then what happened was, to grow as a trader, the hardest thing is to size your positions up and get a positive P&L. And what I would say to you out there that is watching, what we do with the opportunistic trader and how we do it is we start small. You could start, depending on the size of your account, with 1, 2, 3. Some of my subscribers trade 100 lots. I mean, we got big players out there. And then it's funny, when we put on trades, we have algorithms that actually follow our trades, which is amazing because there are algorithms out there that search out volume. And when they see volume, they go in. They don't ask questions, they just go in. But what I would say is, growing your account is also growing as a risk manager, as a money manager. And the most important thing is, let's say your account starts with 25,000 and now you have 35,000. You now have what I call risk free money. So you have 10,000 that you could kind of play with, get a little bit bigger if you like a trade, make sure you always use stops because you don't want to go from 35 below 25. And a lot of people do that. They bet the ranch on one trade. We don't do that. We're what I call in the business grinders. I'm a grinder. I grind every day. I'm at this desk. We're buying and selling. We're not, listen, we love to hit a home run. We rarely ever do, but we grind. We're grinders. But my whole point is,
It's like in baseball. You keep making contact, the home runs will come.
yeah, I don't even want to listen. My favorite baseball player of all time is a guy named Rod Carew. Okay, not a home run hitter, probably the best hitter in the history or in the top 10 for sure in baseball. And the guy just got on base, had a great batting average, career batting average well above 300, won the batting title, but never hit home runs. Just, basically was the guy, the front guy. So that's the guy I want to be. I just want to get you on base. I want to help you make money, and I want to teach you how to take that money. The hardest thing in trading is to size yourself. I mean, you know that. I mean, you're
Yeah,
you're in that situation now as you go. I mean, you got to go from trading whatever you trade to a bigger size, having bigger P&L, understanding, like one of the hardest things as a trader, and I go back to this, and really, when I was at a company called Spear Leeds and Kellogg, which was probably the best firm on Wall Street for traders and to learn, and if you didn't make seven figures, they fired you. They didn't even ask questions. You could make $650,000, you got fired. They thought that desk spot was worth more than $1 million, but we were trained there to make money. There were no excuses. We made money, but that's really where I cut my teeth and learned how to size up. And listen, people watching now, that's the hardest thing. Listen,
it's definitely the hardest thing. And just to keep in mind, a lot of people think that the most important part of trading is either being right or wrong on a trade. And like you said, it's that is actually not the most important thing. I heard Lewis, I think it was Lewis Bacon um, from the Big Macro Fund,
more
and
more
uh,
capital.
Paul Tudor Jones also say that his best traders in his macro fund, the best guys have like a 54 or 55% win rate on their macro calls, which is not.
I don't even think they have that, but that,
So it comes down, right. So it comes down to money management, and what I've learned is, you have to believe in your methodology, but when you're sizing up, you have to kind of expect that you're going to lose at some point, and the size you put on, once you lose, your size can't be that big where the next day you size right back down after one loss. It has to be the same size the next day. Like one
really,
loss can get you out.
I don't trade that way. I basically go totally the other way. I literally, so here's what I would say to you. Let's talk about this. Okay, you're trading. You have a number in your head. Okay, whatever. I always looked at it like I would look at it. Let's say I had a really bad trading day. Okay, and I lost whatever the number was. You know, my biggest thing and the most important thing to traders out there right now, that is the most important thing, and this goes for you right now. You have a number right now that you have never made back. I don't know if that number is 50 grand, 100 grand, 200 grand, 400 grand, but you have a number to make back. So that's the key. You want to keep that loss in a number that you can make back. And what happened as I was growing, let's say I went down 100 grand. Okay. I knew I could make 100 grand back in less than 3 days, trading small or doing whatever. But there's a number that you don't want to get to because it becomes too difficult to come back. And you know how long it takes to come back. Okay. Because now you have to trade smaller, you have to trade smarter, and you have to trade much tighter. The beauty of what we try to do is we try not to go down those numbers. We try to build up our P&L, and then we want to get bigger. And that's what made me really good at what I did for so many years, was having the ability to basically, all of a sudden my average day was a $500,000, and then I was making 1 million, and then I was making more. And I was, listen, that growth started, I'm not even kidding, under $1,000, and then what happens is, as you get bigger and more, you know better at what we do, you you can size up. And the reason why you can size up, Eric, right now you have a number in your head, you can't make it back. You can make it back, but it's going to take a long time. So you never want to get to that number, and we've all been at that point, and it's grueling. So what we try to do, where I am at the Opportunistic Trader, for our subscribers and members and people that are watching, is give trades that are defined risk, that make sense, that don't put people too far in the hole. Now, listen, I can't control the size people are doing, so hopefully they're listening and doing a much smaller size, but there is no reason we should be in a deep hole. And in trading, that's the hardest thing to come out of. And
Well, the problem I think with people following like you or me is, we if one of us goes on a hot streak, right? People are what's going to happen is, like, okay, one trade, two, three, they're winning. On the fourth trade, they're going to size up like 10 times what they were sizing up on the first three, and that's a big.
that I don't know, and that
I know.
should definitely size up. I mean, if you
So
view
how should people size up? Let's take a hypothetical.
Listen, I don't know what people's sizes are, so I don't want to really get into the numbers. I
Well,
mean, I know,
let's say a person has $100,000 account, okay, and so what's an appropriate
I
number of
don't know. I would say 2 to 5 contracts to start, maybe, and grow from there depending on the P&L. I know people could be a lot bigger than that. I mean, it's not a lot of money, but
two to
when you
five contracts on 100K? I think is appropriate. I think a lot of people go into it. Maybe there's you have that gambling mentality. People want 100% returns. They they put on much bigger
Well, the
than what.
100% return doesn't have to do with the size of the account. I mean, what's the difference? It's just you're doing it on a contract size. But what I would say is, what we try to teach is a grinded up strategy. I've done it for years. I'm doing it right now as we speak. And the bottom line is, it's growing, like it's growing pains, like everybody has it. Like, I know if we lose $1 million, I can make it back. Okay. I you have a number, like everyone has that secret number. I don't know what the number is for each individual person, but you never want to be in a position where you're down a number that it becomes very difficult to make back, because your account size will dwindle and your position size will dwindle. So if you're doing 25 contracts and you lose half the account, you got to go back down to doing 5 contracts. It's going to take you 5 times longer to make the money back. So the key is not to get into that loss, to grind up the P&L, to learn how to size up positions as we're making money, and or you're making money, whether you're trading with us or you're not. And really, you got to grow as a trader. It's funny. I was talking to a guy who's a friend of mine, and he kind of trades his own money. He's doing a deal, and he wants a 95% payout, but he's not running any real money. And I learned early on, when I left Spear Leads, and started my hedge fund. There was a gentleman, Stephen Schoenfeld, who seeded my hedge fund originally, which I appreciate. And he gave me a 40% or a 35% deal. All the other traders were getting 60, right? So I look like an idiot, right? Why are you trading for 30 or 35%? But my box or my capital was 10 times as much. So I made way more money than anybody. So the key is, okay, to get get capital and grow the account. But the deal, like if you're looking for a trading deal or you're not trading your own money, the deal is not as important. Commissions aren't as important, the deal's not as important. But what is important is getting a decent amount of capital to trade. So I know we're bouncing around, but really the point that I'm bringing up is, it's important, with the most important thing, more important than, like you said before. And I really don't like when you say it, is like you get hot. Like, I don't get hot. I just sit in this position and try to do the same things over and over and over. And you know what? Sometimes I don't feel like I ever get really hot like you do, I guess. I don't like when you say hot, like I all I'm doing is grinding all day. I'm grinding today, I just have to make decisions. Do I add to my oil short, or do I sit in the position I have? It's now, you know,
But Larry, people following you, they're gonna see you've seen like your SPX trades. Those have a propensity to go on a hot streak, 10 in a row, 15 in a row.
No,
So
but that's not hot. Those are just playing the odds in a market and understanding what has happened in options, which has made it great for us. Okay, is the fact that there's so many novices playing in this game. Listen, it took me, it took you less. It took me 4 minimum years to understand options. And I was on the trading floor doing it 24 hours, not 24 hours because we didn't have that, but basically in Chicago from 8:30 a.m. to 3:30 p.m. every single day. And it took 4 years to get a clue, okay, of how to price options. Nobody out there knows anything about pricing. Very little. It takes years to learn this. And that's what's giving us the advantage on these spread trades that we're doing in LSP. We have a very large advantage right now, I believe, because the barrier to entry to trade options used to be you needed a seat on the floor, or you needed $5 million in your trading account, da 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 da. No one was allowed to trade options. Now anyone is on their phone trading options the same way they traded equities. So you're saying, we're winning 85% of the times. We're doing high probability trades. Now, listen, those trades don't work all the time, but they have a very high probability. If you sell a $40 call spread out of the money today, you have a pretty high probability of that working. Okay. It may not work. We could go up 40, but 7 out of 10, 8 out of 10 days, that won't happen. So when you say, you know, that we're hot or we're having huge wins, the reason why is we're skewing the playing field to be in our favor. That's what I say. And I listen. You always want to quote unquote get hot or whatever you say. I feel like that's like such a gambling mentality. I don't get hot. I do the same things day after day. I don't change what I do. You know it. You've been sitting here. We do the same things every day. We decide whether we're going to sell a put spread or call spread. We look at the same macro thematic trades. We trade pretty much 40 of the same stocks all the time. And we're very, very disciplined in what we do. And in a lot of my outside products, I haven't done trades in a while because the setups haven't been there. And I hope people understand that. We don't want to put trades on for the sake of putting trades on. January, February, March, and April were unbelievable. If it stayed like that, we would have gone to the Hall of Fame. But markets change. We want to be prepared, and I think moving ahead here, there's going to be a lot of movement coming. I know no one can see it. There's very light volatility, very light volume. But my question to you is why? We're at a record high. I mean, there's nobody out there. There's nobody selling. There's no volume. Why? I'm asking you. Why do you think that is? Why is there no accelerate. Why is that? You know?
I think I think a lot of it has to do with a lot of long-term investors that wanted to buy never got out. Um, there just doesn't seem to be a new base into the market that will create volume. Everything's driven by algos up and down. Uh, Today's investor, especially over the last few months, very reactionary to headlines. So I don't know. I feel like it's just dominated by flow in and out, and that's what people are looking at.
Well, the flow is very light, and I'm seeing a lot of cracks in the armor. I know I don't want to hit on one of your favorite things is Bitcoin. Back down, got down to 108,000, which is an
You can't
insane
possibly hit on it. You've been wanting to sell it since it was like at 50.
50,000 or $50. Listen, I don't want to get too far into it, but I still don't know what it does. I still don't know why it has a value that fluctuates every single day. You'll tell me why, but it makes no sense. Okay. If they're doing banking transactions or whatever, or their energy or whatever thing you come up with, there's no reason why that should be 108,000 on Monday and 111,000 on Tuesday. Back to, this is just a trading vehicle. And this is what we call diamond hands. You just got to hope someone's dumb enough to pay higher than 110. But I would tell you, I think this thing is going below 100, and I think it's going below 100 fairly quickly. It just, listen, the reason why there's no acceleration in Bitcoin is because it's too expensive, dude. They're going in Solana, they're going after Ethereum. It's a lot cheaper to buy a $3,000 product than it is to buy a $100,000 product, right? So, or $180 stock versus this is $100,000 stock, $110,000. You can't buy a lot of it. I mean, it's 10 times the price of Nvidia. I mean, you can't buy a lot of it. So that's why this thing can't accelerate because it's just too expensive. Looking at it, I'm looking at the chart right now. It just, to me, doesn't look like it's good. I mean, but, also,
Doesn't
it's funny. I was listening to some,
look good. I mean, you're a mean reversion guy. It just dropped over the last couple weeks from 124 down to 110.
okay. And it went up from, it looks like 78,000 to 120. So I don't know. I mean, I do not like it at all. But you know, and then Thomas is writing in it saying the U.S. stock market hits its most expensive valuation in history, surpassing the dot-com bubble and the run-up before the Great Depression. Bloomberg reporting. Dude, you know what this is.
What is it?
Um, it's a bubble. It's just a matter of, listen, it's not popping today.
I wasn't trading back in '96, but I know Greenspan had that irrational exuberance speech in '96. The market topped out in '99. So what is that? So in the mid '90s, it looked like a bubble too, and then there was like 3 years more of it. So how does that? How does all that help people? I don't understand.
What do you mean? How does what help people?
Just calling, it's a bubble. I know the valuations are high. We see the charts, we see the numbers. It's all there. But timing the bubble, like I don't think it actually helps people to keep saying it's a bubble because it's just all about the
Why?
sell of the
Why?
time.
Why doesn't it help people?
He
We
just
want.
said in
We want.
1996, Greenspan called the market a bubble. He was the
No, he
Fed chair,
didn't. He
and
did
there
not
were
call.
three
He did
years
not
more.
call the market a
Yeah, he
bubble.
said it was
He did
irrational.
not. That's not a bubble. Well, that just means, dude, we're so
There was
past
three years
irrational.
more of
We're
that.
so past irrational exuberance right now that we have something totally different. And what we have, and it'll come to my office in a little bit. Okay, I have a person that's working in the building that I went out to the dumpster to throw away some garbage, and he works in the building as a maintenance man, and he knew that I was in trading. and he said, "Hey, Larry, I just moved $20,000 into my Robinhood account. I don't really know what I'm doing, but I'm trading, and I made $200, and I want to come talk to you." Okay, there's 5 billion people like that. Okay, there are people with access to options and to other things that can point and click on their phone while they're driving in a car or laying in bed and can trade. And that is worse than irrational exuberance. Listen, could you go in to an orthopedic surgeon's office today and do surgery on his customers, on his people? No, you couldn't. So, how do these people think that they're with no experience, no understanding, not understanding one thing, can make a lot of money trading? And I've seen this before, not as big as what it is now, but in 1999, I worked at Spear Leeds and Kellogg. We were the largest specialist firm on the floor, and we were the largest um, customer business. We cleared the most customer business. Okay, we cleared customers. So I was in a building. We were trading proprietarily for the company. Okay, and we had a half a floor of traders that traded our capital. Right, professional traders did it for a living. In 1999 to 2000, it was a 5-story building, Eric, and we ended up having the entire building filled with traders, doctors, lawyers. People were quitting their jobs to trade. Okay, we have the same thing now, but in a different way. Um, now it's not a job to people. You could have a regular job, and then basically you can you could do this with your regular job sitting at your desk. The same way there's sports betting. People are betting sports right off a sports app. It's the same thing. There's no differences. There's no professionalism in this trading. I'm just telling you. So when you say, I keep saying a bubble, I'm not saying all I want is, I'm not telling people not to buy. I'm not telling people not to do what they want. I'm telling people that you need to be cautious just in case, and you don't want to lose all your money, which happened to everyone in 2022, 2008, 2000, 1996 during the Russian debt crisis, 1987, and the whole 60s. There's many times. Listen, the market is not guaranteed to give you money. I know that's what everyone thinks. Let me ask you this. Do you think there's one person out there that would be happy with a 10% gain on the year?
No, no,
Isn't that a problem?
not in today's day and age. No.
Right. So isn't that a problem? The market is not a gift. It's not here to hand you money. I know, so my point is, we can't do other people's jobs. I can't walk in to my son's office, who's an attorney, and become an attorney. I have to be trained, and I have to know what I'm doing, and I have to pass the bar, and I have to get experience. There's no barrier to entry here. Anybody can do this. Anybody can buy Nvidia, and they all are. So all I'm saying is, you want to be a little bit careful, and you want to, listen, you want to take money out of the market. And there are many times we're long Nvidia and short Nvidia, and long, XYZ and short XYZ. But I'm just leery because, listen, in the last 5 years, honestly, when have you heard about a bubble? No one said a word about a bubble. Okay. Now you're hearing it all the time.
No, that's not true.
It is
2021,
true. 20,
2021, it, bubble was thrown out basically from start to finish because we were coming off COVID, and then it went a little bit too high, and then it went even higher.
what does that have to do? That
Mid
is not even
23, all of
anything.
last year, all the macro people that are looking at valuations. Valuations are always going to be high in a bull market. I mean, that's not valuations themselves are never going to get high valuations themselves never get the market down. What gets the market down is usually when monetary policy comes in and doesn't give people what they want.
Dude, monetary policy is so irrelevant to what we're doing here. What is the monetary policy?
Exactly. So, I mean, this kind of thing, talking about
Dude,
high
we're
value.
not, listen, I love you. We're not doing this right now. You're not saying, I'm talking about it because I think it's important for people to be leery. You're not leery because you're Johnny Diamond hands. You're good until till last Wednesday when every single person in America is calling me freaking out that Palantir is going to $45. It was trading 142. They're like, "Oh my God, I'm going to lose all my profit. What do I do?" Dude, this market is filled with that. Okay. They couldn't, dude, we went down 5 days in NASDAQ last week and it felt like a crash, dude. And we were still up 8% for the year. And it felt like a crash. And the guy was freaking out in Meta at $700 a share that bought it at 350. Why is he freaking out, Eric? Tell me why.
Probably bought at the high.
No, he didn't. He bought it at
Probably bought
350.
more at the high.
He did not buy a share
I'm
more.
probably not telling you.
He did not buy any more, Eric. He's giving back profits. So people come in, they've made millions of dollars in this move. They won't take a profit. They will not sell. Okay. So now their account went from 2 million to 1.4 million or 1.6 million. They felt like that account started at 900,000. So they're still up, but they feel like wherever their high watermark is what they deserve to have. And you could say what you want. This market is all filled with that, and no one will sell. So again,
I'm not in any way in disagreement with any of that. I've said it with you that
so then how is that not a bubble?
gambling mentality. I just don't think that that alone is going to is enough.
I'm going to say this, and then I want to touch on macro before we close. I will say this, and it's what I always say, and it's my moniker. And I saw it on last Wednesday. Sellers live lower, buyers live higher. Right now, the SPOO's down $3 today. No one has to do anything. We're dead as a doornail. Everyone's just sitting and praying somebody buys it higher. Okay. But if we go down 45 today or 75, people are freaking out off of one down day. That doesn't bother you. That doesn't bother you when we have 80 updates. Talk about, having a winning percentage. We have 80 up days in one down day and people freak out on every down day. Why? They're up a lot of money. Why are they freaking out? That's what I don't understand. So to me, it feels like weak hands. Okay. And the weak hands are that people I know have made millions in the market, but they're spending like wildfire. And they need the market to keep going up to keep up with the spending habits that they have. So that's what I feel. Okay. And I feel like the market is in danger of having a very large correction. And, listen, now today you might not agree with me, but I think the markets are all going to close down on the year. Okay. I'm not saying we're going to crash. I just think listen, why should it be okay for everyone to own stocks and make money? Don't you have to be good at this game? No, you don't have to be good at what you do. You can just buy anything and be rewarded, you know? And then they're buying memes and everything's a meme and everything is buzzword AI. AI is unbelievable. I mean, I don't know. But anyway, I want to just get to the market. You talked a little bit about how, we gave back half the move. I don't see that. I'm seeing currencies. Dollar got a little stronger yesterday, giving back a little today, but quiet. Bonds is a weird one. We haven't talked about that. This is weird. The short end is bid to the moon, okay, and the long end is for sale. So that's a steepener, and I think that may be because the Fed is in disarray. And now, it's funny. No one's saying anything, but maybe since Trump came after this woman, maybe he won't cut just to mess it with his mind because he doesn't have to cut. He does not have to cut. There is
No, he.
no
I don't know why he's cutting. I don't know
why.
why
Because
he
he
gave that.
wanted the freaking president to get away from bothering the Fed. That's the only reason. Okay. And now he took it in his own hands to fire her. Why does he need to cut? He should just not cut because he doesn't really need to cut. And we'll see. So bonds are weird. That's a weird action. That means to me, maybe they get one cut and then they do nothing because that's why the long end is so weak. And what else is out there? Gold is still inside range, no trade. Um, Nat gas is flat. I've been trying to look for a way to buy nat gas. We talked about UNG and Boyle, but those things they're so broken they can't even rally. Like UNG can't go up. It's just so low, and these products are set to fail because of the roll. They're rolling these positions, and all these levered ETFs, and in
You
general.
got to be right. You got to be right extra quick on these.
Right. So I don't want to trade it. So I'm going to wait on that. Again, oil held the bottom for right now. We have numbers today. Again, I think oil goes lower to $60.
We have numbers today in oil.
Well, we have EIA after the close or whatever on Tuesday.
Oh, that's the API on API.
Okay, so we have API and then the other one. I don't think they mean much, but last week they showed a huge draw and the market rallied. So I'm expecting them to build back that draw. Um, and like,
But the draws have been kind of the inventory numbers have been pretty volatile, up and down 5 million barrels a day, up and down.
okay, uh,
So
I don't
what,
know,
what I've seen on crude inventory reports is there's little logic to the reaction. So you like see a good number, but oil could fall and the other way around as well.
yeah,
So
100%. So we'll keep an eye on that. We're going to add if it gets much weaker. Again, I think Bitcoin is interesting. I think it goes lower. I know you like it, but I think it goes lower. I think it's
I like it technically here. At 110, I would cut at 109 if it breaks 109. So kind of like a small risk, potentially high reward setup.
that's a really tight
That's
stuff.
tight. That's tight.
All right. Well, listen. As far as the S&P down four handles, expect a very quiet day. What's weird is, what are we going to be quiet today and tomorrow because we have Nvidia's earnings, and if you look at Nvidia's straddle, it's not even pricing in a big move.
I
So
was thinking
I don't know what's going to move us. We'll keep an eye on. We'll keep an eye on.
we were quiet yesterday. We were set up potentially to be quiet again today and tomorrow. So that's 3 days in a row after Jackson Hole. I think that's setting up for a pretty explosive move Thursday, Friday.
Really? Okay. Well, we'll wait and we'll see. But I hope we gave you guys today some good insight into trading, money management, etc. Touched on the markets. Very quiet day. Nasdaq down 30, S&P down 4. Don't expect much. There's a $23 straddle. I think that may be a little bit high. I don't know what's going to move us. Trump's really out there with some crazy stuff. So the market's totally, the algo reacts instantly and then they realize it's fake news and then they bring it back. It happens every time. Every time.
Are you banking on that today?
What?
That the market will come back on this algo?
No, I'm not banking on anything. I'm just selling premium. I think it's a really good thing to do. Um, I'm selling both sides. I don't think the Listen, Nvidia is trading at basically 181, a couple of dollars off its all-time high. It's priced for utter perfection. So, there may be a disappointment there. I'm going to set up some positions for that. We'll discuss Nvidia in depth tomorrow, what people are looking for and how we're going to play it. But we're getting really close to the opening, about 10 minutes to go. Quiet day all around. You could probably read a book midday. It's so quiet. But wish everyone luck trading, and we'll be back to everyone tomorrow. Enjoy.